Welcome to our class, and today I'm going to do a revision of knec past paper, that is financial accounting. And this past paper is going to talk about the preparation of the ledger accounts, and I will just be able to go further to the extraction of a trial balance so that you can be able to know the importance of actually preparing the trial balance after preparing the ledger accounts. So a ledger, when we are going to prepare a ledger, is actually a principal book of account whereby you are going to record the business transactions, both cash transactions and also the credit transactions. So the question reads, the following transactions relate to Conipay traders for the month of August 2019. And then we have some transactions here. We have August 1st, whereby they are saying started a business with 5 million, which was deposited in a business bank account. And also I have bought a motor vehicle for 1.2 million by check. And then on 23rd, we can be able to have, it says that we withdrew 1.3 million from the bank for business use. And then I have on 31st there, bought machinery for 600,000 in cash. So you are required to prepare ledger accounts to record the transactions above. So we are going to prepare the ledger accounts, and then later on we will be able to extract the trial balance. So on the first transaction, I'm going to start from 1st August, and then we analyze so that we can be able to know which accounts are we going to open from that particular business transaction. So the 1st August, they are saying that started a business with 5 million, which was deposited in a business bank account. The moment you see that it was deposited in a business bank account, then we are going to have the bank account there. And then the other one is going to be capital. Whenever you start a business, you must always have capital account in the first transaction, whereby you see the word started a business. What should come into your mind is that we must open a capital account. And again, what you should be able to remember in this particular capital account is that the capital account is going to have a credit balance, because we usually assume that in the first transaction, everything has increased as per our rules of actually when an asset increases, you debit. When an asset decreases, you credit. When liabilities increases, you are supposed to credit, and when liabilities decreases, you are supposed to debit. So in this case, what we are actually going to do is that we are going to open a bank account. And because we have said that in the first transaction, we always make an assumption that both of them have actually increased, both transactions have actually increased. So what we are going to do here, is that we are going to have the bank account, and then we debit the bank account, and the capital will always be credited. It is because we assume that you have not utilized the money, that particular capital, in terms of maybe purchasing an asset. That's why we make an assumption that it has actually increased. So I will have the bank account, whereby I'm going to debit the bank account, and then I'm supposed to credit the capital account as follows, because it was 1st August. So I'll have my bank account here. So you can be able to see my bank account, and this bank account I was supposed to debit it, and the date is actually 1st August. So I'm going to have 1st August here. The details is going to be the corresponding account. When you talk about the details, that is going to be the corresponding account affected by a similar transaction. And because they said that started a business with 5 million, which was deposited in a business bank account, and we have said that the other corresponding account is going to be capital. So when you are in the bank, the corresponding account is going to be capital, and then you write your 5 million here. So you have debited the 5 million, and you remember from the rule of duality, or the duality concept of accounting, is that for every debit entry there must be a corresponding credit entry. So what I'm going to do, I've debited here, I will just go to the now capital account, and then I credit on the same date, which was 1st August. The corresponding account now here is going to be the bank, and then the amount is going to be this, our 5 million. So let me record, because it was 5 million. And there I record I add the zeros, so that it can be 5 million there. So you are done with the first transaction. The next transaction, what you are actually going to do, you are going to have this particular transaction where they are saying that they bought a motor vehicle for 1.2 million by check. 1.2 million by check. So meaning that this is a non-current asset that I'm actually purchasing. And when you purchase a non-current asset, you are going to open an account by that name of that particular non-current asset. It's not, you are not going to have purchases account here. Purchase account is going to happen when you have bought goods or bought stock. But a motor vehicle is a non-current asset. So I'm going to have the motor vehicle account, and because this is an asset coming into the business, and meaning that now the assets are going to increase when you have bought a new motor vehicle, then we are going to debit the motor vehicle account, and because we paid the amount by check, we are going to credit the bank account as follows. So on August 12th, I will just come to the motor vehicle account here, which I've prepared, and then highlight on August 12th. The corresponding account is going to be the bank because we paid by check, and the amount in forward is 1,200,000. So that's how we do it. So we are done with that particular transaction, and then we must do the corresponding the corresponding account. We must also include it. So we have debited. So this is the debit side, and then the credit. And also this is the debit, credit, debit, and then credit. So we have debited the motor vehicle account because we paid money by check, and the bank account is actually going to decrease. The bank balances are going to decrease, and remember, cash at bank is an asset. When an asset decreases, you are supposed to credit. So we'll just be able to go to the bank account. So where we have the bank account up here, and then I will credit the same amount, which is actually on the same date of August 12th. So the corresponding account here is going now to be the motor vehicle, and the amount involved is 1,200,000. So that way, and then let us move to the next business transaction. Is 23rd. We withdrew 1.3 million from the bank for business use. So if this was the cash book, this one we could have called it the control entry. These are the control entry that is going to affect the cash and the bank. But now because we are in the ledger, then the accounts again that are going to be affected in this case, it is going to be the bank and also the cash. Remember, it is because of the word business use. If it was for private use, then we could have opened the drawings account and maybe the bank account, or the drawings account and the cash account. But in this case, it's actually the business use, whereby now we are supposed to have the bank and the cash. So for business use, bank and cash. For private use, you are going to have bank and also drawings. When you withdraw for your own private use, that's going to be the bank and the drawings account. So this particular word drawings should not be able to confuse you. So what I'm going to have there is the bank, because I'm withdrawing money from the bank. Then it means that the bank balances are going to decrease. So I'll just go to I'm supposed to credit the bank because the money in the bank is going to decrease, and because I'm getting money out of the bank to the cash for my business use, then the cash balances is going to increase. So because the cash balances is increasing, I'm getting money, remember, from the bank to the cash account, meaning that the cash account is going to increase in that sense. So I'm supposed to debit the cash account. Remember, cash is an asset. When it increases, you are supposed to debit. And I will just come to the cash account here on 23rd August. The details that I'm going to record is the corresponding account, which is going to be bank, and then the amount involved is 1,300,000. And then I will immediately to the bank accounts, so that I follow the duality concept of accounting. So it is going to be on August 23rd. The corresponding account is actually now cash, and the amount involved is 1,300,000. Then let us now go to the last transaction. Last transaction, they are saying bought machinery for 600,000 in cash. I'm buying machinery for 600,000 in cash. So what I should be able to have there is that I'm going to have the cash account and also the machinery account, because machinery is a non-current asset. We are going to open an account by that name of that non-current asset, which is machinery. Remember, if it was both goods, then we could have a purchases account. But in this case, we are going to have the machinery account. And because machinery is going to come to the business, meaning that the machines are going to increase, which are the assets, then we are supposed to debit the machinery account, and then we credit the cash account. So as follows, let me debit the machinery account on August 31st. So I'll come to the August 31st. The details, because we paid in cash, so the detail is going to be cash, and the amount involved is 600,000. And then, so you have debited that. Remember, this is the debit, and this one is the credit. This on the left hand is debit and credit. You should be able to indicate that. So we have debited the machinery account, we have not credited. We want to be able to follow the rule of double entry. So I will just come to the cash account, which is here on the August 31st, in the name of machinery, and the amount involved is 600,000. So that is it. So now what we are going to do is to balance the ledger accounts off. And when you want to balance, you are going to ascertain the totals on the debit side, like under the assets. Assets always start, you should always start to balance them from the debit side, because all assets are going to have the debit balance. So like this one, which is the bank, I'm going to start balancing it on the debit side, but sometimes the bank account can have an overdraft. So if you end up having it a more amount on the credit side, then you should be able to know that there was an overdraft in that particular bank account. So in this case, you can be able to see that the debit side has 5 million, and the debit side is the one that is going to be more, the way I'm seeing here. So I'm going to put to balance it at 5 million that way. So I'm balancing it at 5 million, and then I'm going to ascertain the totals on the credit side. And the totals on the credit side, you can be able to see that I have 1,200,000, and then I add 1,300,000, and I'm getting 2.5 million. So I'm going to take this 5 million, I minus the totals of this, which is 2.5 million, so that I get the balance carried down. So I'm going to take 5 million minus answer, whereby I'm going to get another 2.5 million. So that difference is what we are going to call the balance carried down. So I'm going to have my balance carried down of 2.5 million in that manner, so that if you add now this plus this plus this, we should be able to get 5 million. So the balance carried down, which is that balancing figure, should be brought to the opposite side and be called the balance brought down. So I'm going to have balance brought down, and note the balance carried down is what I am going to bring here, but below this particular equal signs, so the 2.5 million will be here. So I've balanced, I'm done with balancing the bank account. Let me go to the capital account. Capital account, you can be able to see that on the debit side it was having a zero balance. So I'm going to carry the whole amount in terms of balancing, because if I can ascertain the totals, the credit side is going to be more by 5 million. The debit side has a zero balance, so I should be able to balance it this way. I'm going to balance it with 5 million in that manner, 5 million here, and then I carry the whole amount since there is nothing here, I have a zero balance. So I'm going to have balance carried down is going to be the whole 5 million. I will carry the whole 5 million because I was having a zero balance here. So that's why I will carry the whole 5 million. So what I've carried down as the 5 million should be brought to the opposite side and be called the balance brought down. So I'll come below here and then say balance brought down, but now the brought down is going to be recorded below these signs. So what I carried down is what I will bring down in this case, which is 5 million, in that manner. So I'm done with balancing the capital account. Let us go to the motor vehicle account. So motor vehicle account, you can be able to see I have it here, and the motor vehicle account in this case, it is having 1.2 million on the debit side, but we don't have anything on the credit side. So we are going to carry the whole amount in terms of balancing, because we are supposed to balance it at using the 1.2 million. So I have 1.2 million here, which is the balancing figure, 1.2 million. So I am going to carry the whole amount as the balance carried down. So balance carried down is going to be the 1.2 million, the whole amount, because we are having 0 on this particular side. So what you have carried down, you will bring it down in the opposite side. You call it balance brought down. So the 1.2 million should be below here. So in that manner, so you are done with balancing that. Let us go to the cash account. So you can see the cash account, it is having more on the debit side. So it's supposed to balance. The one that has more is what you use in terms of balancing. Like for example, I can be able to see that the debit side is more, the credit side is actually 600, this is 1.3 billion. The one that is more is what we take as our balancing figure to be 1,300,000. And then now the balance carried down in this case is going to be 1.3 million minus 600,000. So I take the calculator, 1.3 million, which is this, you minus that, you get the difference, minus 600,000, you get the 700,000. So the balance carried down is going to be 700,000. So that if you add now this plus this, it should be equal to 1.3 million. So you bring it down to the opposite side as balance brought down, which is actually 700,000, in that manner. So you are done with balancing the cash account. So let us go to the machinery account. You can be able to check this machinery account. It is having 600 on the debit side, but nothing is on the credit side. So I'm going to use the 600,000 in terms of balancing. So I will have this 600,000 here, 600,000, and then I carry the other amount as the balance carried down. So balance carried down is 600,000. So you carry the other amount there, and then you bring the balance brought down to the opposite side. So I'm going to have the balance brought down, which is 600,000, what you carried down. So again, you are done with balancing that one. So now I told you that from the beginning that I was extracting a trial balance. The purpose, why should we be able to prepare trial balance? The purpose of preparing the trial balance is to check the arithmetic accuracy of the ledgers. If we prepared the ledgers accurately, and if the trial balance is going to actually balance, then we will have a certain belief system that we have prepared the ledgers perfectly well. But remember, the trial balance can balance when we have errors. So in our later classes, we are going to discuss about errors that will affect the trial balance. So when the trial balance that I'm talking about, trial balance, the trial balance serves 3 purposes. So the trial balance is going to serve 3 purposes. One of the purpose of preparing the trial balance is that it acts as a basis of preparing final accounts. So that's one of the function of the trial balance. It is going to act as a basis of preparing the final accounts. The second one, it will help us to know the arithmetic accuracy, of the ledgers. And then it is another function. It is going to act. It will act as a summarized ledger. So that's another purpose. It will act as a summarized ledger. So in this case, let us extract a trial balance. From our question, if you can be able to revisit the question was talking about the knec traders. So I will just come here and write the title, knec traders trial balance as at August 2019. So we are going to use the word as at. So the trial balance is going to be prepared in this format. We are going to have account, we are going to have debit, and then we are going to have credit. So that's the format of the trial balance. So we are going to start from the first account. Remember, the first account that you prepared was the bank account. So bank account, you will just come and write that account here as bank. So that's the bank account. And then you are going to check the balance brought down on which side is it going to be. If it's on the debit side, then you will be like now this one, you can be able to check that the balance brought down is on the debit side. So in the trial balance, you will just come to the debit side and indicate that 2.5 million because it is on the debit side. So you write 2,500,000. So you are done now with the bank account. You come to the capital account. So capital account, you can be able to see that the balance brought down is on the credit side. So you come and record the capital, and because the balance brought down is on the credit side, you come to the credit side of this trial balance. That you record the amount was actually 5 million. So you record your 5 million here. So you are done with the capital. And then you come to the motor vehicle account. That is another account. So I have motor vehicle. So that's motor vehicle. So let me check motor vehicle, the balance brought down. So the balance brought down is what we are checking. You can be able to see that the balance brought down is on the debit side. So you come to the debit side here. The amount involved is 1.2 million. So you record your 1.2 million. That's 1,200,000. And then you will come to the cash account. That's another account. So I have the cash. That's the cash account. And the cash account, again, we check the balance brought down. So you can be able to see that the balance brought down of the cash account is actually on the debit side and is 700,000. So you come and record your 700,000 here. And then you go to the machinery. So you record your machinery here. The balance brought down is 600,000 and it is on the debit side. So you are going to record 600,000 here. So you are supposed to balance now. It's supposed to balance itself. So when I calculate, I'm supposed to get the same figure. Like now, on the credit side here, you can be able to see that I have 5 million because there is no other figure here, meaning that if we are going to calculate this one, it should also be equal to 5 million. So I'm going to take 2.5 million. So from my calculator, I will have 2.5 million plus 1.2 million. That way. And then plus I have 700,000. So I have my 700,000 and then plus 600,000. So that it balances. You know, I want it to balance with 5 million. So I have my 700,000 already here. So I'm going to add the 600,000 plus 600,000. So you can be able to see that it is balancing at 5 million. So when it balances in that manner, then the ledger accounts were prepared perfectly well. They were prepared perfectly well. So that's how we prepare the ledger accounts, and that's how we can be able to extract a trial balance. Something again that you should learn from this particular trial balance, that all the assets are going to be have a debt balance. Like now the bank is an asset, the motor vehicle, that's an asset. You can be able to see that they are on the debit side. The cash is an asset, it's on the debit side. The machinery is an asset, it's actually on the debit side. If we were to have expenses like maybe rent paid, rent is an expense also. It should have, if it was there, we are making an assumption if we were having rent account or rent paid account, then that particular balance could have been on the debit side. So assets, when we are all the assets and expenses are going to be on the debit side on the trial balance, expenses and assets. When you go to the credit side, we are going to have all liabilities. Like now capital, remember capital is a special type of liability. So that's why you see that it's actually on the credit side. If we were to have creditors, the bank overdrafts, they want to be on the credit side because they are actually liabilities. And also incomes and revenues. Like now the sales account. Sales account is a revenue. It could have been on the credit side. So that's what you need to note. So liabilities and incomes, revenues, they are going to be on the credit side. On the debt side, we are going to have the expenses and assets in this particular trial balance. That's what you need to be able to note. So thank you, and we will meet again for another revision.